Welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me, Surbhi Upadhyay in the studio. In moments from now, Prashant will also be joining in. And we've got Nigel D'Souza, as always, in the newsroom. Guys, it's the penultimate day before the budget D-Day. Choppy, but not bad, right? By the end of it, we're flat on the benchmark indices. There's so much action happening in the mid-cap space. The mid-cap index is up 1.3%. The small-cap index has rallied more than 2.3%. And even on the Nifty, if you pull up the intraday chart, we have been making higher lows, higher highs, higher lows. That intraday chart will come up. It's just in the last 10 minutes, you are seeing the markets give up some gains. By the, concluding everything, we're still absolutely flat on the Nifty. The intraday low on the Nifty was 17,537. So we are about 100 points above that level. The Adani Group stocks are seeing a fair amount of buying. Adani Ports up 3%, Adani Enterprises up 2.8%. All the indications are, and the subscription so far seems to suggest that the mega FPO, the largest that India has seen so far of 20,000 crore, is going to sail through. Adani Enterprises is up 2.9%. It's still trading below the floor price for the FPO, but the QIB portion has been fully subscribed. Buying is coming through in banking names. The Nifty Bank is outperforming today. The index is up close to about 0.5%, with State Bank of India leading the charge. The top Nifty gainer today is M&M, with a rally of 3.7% as its electric vehicle offering, XUV 400, has seen massive bookings, 10,000 after it opened up for subscription, opened up for bookings on the 26th of January. So just in 4 days, very, very strong order booking seen for XUV 400, and that's fueled a rally in M&M. But, as I said, the story today is in the mid-cap space. And look at so many stocks like Indus Stars. That's up 15% over the last 2 days. Fertilizer names, NFL, RCF, that's higher. PSU banks, IOB, UCO Bank, BEL. The stock was under pressure yesterday post numbers, but now it's erased all those losses. The stock has gained. The only pocket which is a bit subdued is IT. The Nifty IT index is down 1.5%, with Tech Mahindra seeing a bit of a crunch down on the back of a weak set of earnings.
Well, I guess you've wrapped up most of the stock action, Reema. I can just say that I guess both of us are wearing both the colors, the red and the green. So you take your pick, and that's been the market throughout, right? It's been in a 200-point band, and no surprise, right? You wouldn't expect very big moves or extreme bets on either side a day before the event. So we've been fairly range-bound. The heartening fact is that the Nifty Bank finally is showing some sign of life. It's managed to maintain green, though it's off the highs, but it's managing to maintain green for the better part of the day. As I toss it to Nigel, just pull up some more stocks. Reema mentioned BEL. There is a budget feel to the day, Nigel. Finally you can see the names on the screen, your BHEL, Power Grid, RVNL, Mazgaon, of course, also on the back of a very good set of numbers. But, some of these CapEx/power, the budget stocks, they're beginning to at least tell us that, yes, it does feel like budget.
Well, that's right, Surbhi. And I think, something really untoward has to come about for the Nifty to go ahead and break that 200 DMA. So I'm counting on the 17,250 to around 17,350 level holding out. And, earlier we were talking about this 400-point range, which was from around 17,800 to around 18,200. I think that range has got reset 400 points lower, because now the broad range is around 17,350 to approximately 17,800 on the upside. That's the 450 point range that I'm looking at. And in today's session, even when the Nifty was 50 points lower, you're not making any money on the call side, or on the put side. So the 17,500 put, yesterday it was getting written, today as well is getting written very aggressively. The 17,400 put as well, aggressive writing is what we've seen at those levels. So that's giving you a sense that maybe the recent low, which is closer around 17,400, could hold out. While on the upside, 17,700 call, well, the premium out there is close to around 100 rupees odd. And out there as well, we're seeing some bit of writing. So maybe 17,800 is a bit of a resistance zone. While on the downside, those dips are getting bought into. Risk reward is favoring you at around 17,400, 17,450. But how do you position yourself in the final hour of trade? Mitesh joins us to help us out with exactly that. Hi, Mitesh. Well, if you've been brave on both the days and gone ahead and bought the dip, you've made some money. But what would the trade be at around the 17,600 odd mark?
So, Nigel, I think, I think while both the days have seen some kind of a bounce back, if you look at Friday's closing, which was around 40,345 for the Bank Nifty, and we are at about 40,500. And for the Nifty, it was around 79.30, and we are at about 17,604, and we are now at about 17,630. So it's hardly been any kind of strong movement. Basically, it's been choppy in the last 2 days without pocketing much gains or without actually continuing any declines. It's a market which is heading into an event, so therefore I think trading would be slightly difficult unless suddenly you have some way of identifying which point is very near to the bottom. So in that sense, I think we are not trading the index, but we're not shocked. Clearly, we've taken some profits on the short position. With yesterday, we've hit the gap level around 17,500, 400 mark. That entire band of 100 points is filled with supports, and then we have the 200 average. So I think this is a market where you would want to trade with stock-specific biases. Look at stocks which have been falling in the last decline and are oversold and now giving reversal. I think that's one of the themes, and I think chemicals and fertilizers is one of the sectors which I think the anchors were just highlighting that. So I think that's the kind of ideas you are going ahead with. I in fact have 2 buy calls right now. HL, maybe again some kind of a budget feel to it. It's gained very strongly today, about 3% up, and is giving a good reversal. That's a buy. Keep a stop around levels of 2,500, 2,650 is the target on the upside. And as I said, I think fertilizers is something which you can look at. Coromandel Fertilizers is also having a very good reversal. That's a buy with a stop just below levels of 878 and a target of around 935 on the upside can be looked at.
Okay, all right, Mitesh, thanks very much for that. So those are some calls one can look at. By the way, I mean, we've also got some interesting earnings through the course of the day. There's IOC, which has been a bit lackluster, to say the least. There's Godrej Consumer, which on the face of it, at least the numbers were better than expectations, but expectations weren't sort of breaking through the ceiling anyway to begin with. Let's go across to Mangalam, and then we'll get the analysis going with Mehraboon Irani in just a moment. Mangalam, so the fine print on Godrej Consumer?
Well, Godrej Consumer, prima facie, these numbers are better than expected, and that's primarily because the expectations themselves were based by the company in their third quarter preview itself. But 2 things that really stand out from the numbers this time around. We start with the India volumes that have grown by 3%. The street was bracing itself for a number of just around 1 to 2 odd %. And secondly, the EBITDA margins have remained stable year on year, and this despite a 70 basis points increase in ad spend. So that's telling you that the company is sweating its operating performance well and using their gross margins as well, because gross margins year on year have seen a 50 basis points improvement, but quarter on quarter there's been a near 280 basis points improvement in their gross margin. So ad spends as a percentage of sales coming at 7.7% versus 6.9%. In the other geographies as well, the Indonesian business, while it has seen a decline of 3% in the revenues, it's actually a positive growth ex sanitizers, a positive growth of 2%, and that reeks of sequential improvement. There's been an 11th running quarter of double-digit growth in their Africa business, so that does well for them. And in India as well, growth has been led both by home care, which has grown by about 10%, and personal care, which has grown by 14%. Personal care business led by the hair colors business, and home care, of course, led by household insecticides and air fresheners. So all in all, good performance coming in, slightly better than expectations.
Okay, got that, Mangalam. Thanks very much. Let's take this to Mehraboon Irani, who's joining in on this leg of the show. Mehraboon, good afternoon. Always great to have you on. And finally, the big budget day is almost upon us. Before we talk about markets overall, Godrej, from a results point of view, and anyway, I mean, there's a bit of a budget angle as well, right? If indeed people like you and me have more money in our hands to consume tomorrow, then that's anyway a kicker for most of these consumption stocks. Your thoughts?
Well, that's absolutely the consensus. I think what you just mentioned, Surabhi. I think anybody and everybody expects that more money will be left in the hands of the taxpayer. So who benefits out of this? I think I would say discretionary consumption is likely to be the major gainer out of this. As far as the entire FMCG space goes, and Godrej Consumer in particular goes, I think quite decent numbers. Commodity prices abating, expect gradual recovery in consumption, and margins going forward hopefully should improve for this entire FMCG space. Also, the fact remains that at the valuations at which they are, there are reasons to have relatively higher comfort than what one felt 3-4 months ago, than when there were more opportunities in the market. So I would say FMCG discretionary consumption also could be a good defensive play in this scenario of the market where a lot of nervousness is still very much there. I think companies can also afford to go in for upfront marketing cost with the ultimate intent of reducing the controllable cost. So I would give a clear thumbs up as far as the FMCG space goes, and Godrej Consumer certainly stands in my top 5 bets in this particular sector. So I would say that if you don't have too many things to do right now, if you don't understand what to do, you're feeling very nervous, market actually is oversold right now, and you want to go and buy something, you can definitely go and buy one of this top 5 FMCG stocks, in which Godrej Consumer is certainly one of them.
Okay, all right. Thanks a lot for that, Merbon. Well, let's talk about a couple of other names then. REC, that's a stock in focus. Remember, it opened up a little bit subdued in reaction to its numbers, but DAM Capital has initiated coverage on the stock, and the stock is flying away. It's up close to around 5%. Abhishek is with us to detail that report. Abhishek?
Well, as you mentioned, DAM Capital has initiated coverage on REC. They have given a buy recommendation and a target price of 175 per share. They say that enhanced growth and stress has continued to come down. So RBI has allowed PFC and REC to lend to infra and logistics sectors, and incrementally these are the new levers for growth going ahead. So they expect 55% of additional growth over the next few quarters from these segments. Management doesn't expect spreads to come down below 2.5%. So 2.5% is the benchmark for spreads, and they don't expect net interest margin to fall below 3.3%. So the steady state in terms of net interest margin guidance from the management is about 3.3% to 3.4%. So they expect ROA of 2% to be protected, and REC has given 8% average dividend yields over the last 14 years. Profitability of REC is much better than weaker PSU banks, is what has been mentioned in the note. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Merbon, what's your view? REC and PFC, they pay out dividend. Abhishek has highlighted a couple of other positives as well. Do you have a view on them? Is that an indirect way that you like to play the power sector reforms?
So, as far as both these companies go, honestly, nothing much to comment on. So that would not be any incremental value coming from my side, frankly.
Okay, no comments on that. Any thoughts coming in on some of the other earnings? So we had numbers coming in from TTK Prestige, Orient Cement, anything GNA Axles now. Numbers are flashing as we speak. 34% jump seen in the company's revenues. The EBITDA has gone up or increased by 63%. So the jump or the growth in EBITDA has been more than that of the revenue, which is aiding the margin expansion. So Merbon EBITDA margins for GNA Axle at 15.5%, which compares with 12.8% a year ago, and the stock is now up close to about 5%. Any thoughts on any of these mid-cap companies which have reported numbers today or post-market as yesterday?
I would say that the focus continues to be on 4 or 5 sectors where I personally believe action has continued to be there. The unfortunate part is most of the stocks in these sectors are not giving pay, and they remain expensive. But I believe they are doing well, and they will continue to do well. And I would put, and I am quite sure they will benefit by the budget. One is the railway space, one is the capital goods infrastructure space, one is the discretionary consumption, where I don't know why I feel a little bit positive towards it. You mentioned one of these names, TTK Prestige. I don't think it will be bad to possibly look at the stock a little bit positively, let the numbers be what they were. But going ahead, this is one space which could possibly spring up in action, considering the fact that the consensus is, and I belong to that consensus, which believes that more money will be left in the hands of the consumer. And there is a space called the bank space, the banking space, where I've been positive right for the last 12 months, where I've clearly come out and said that sell IT and buy PSU banks. And I think in between these two PSU banks and private banks, I still believe that the PSU banks offers a lot of opportunity. So if you are ready to leave a 10% downside because of the overall market, if there is something negative, God forbid, coming in the budget tomorrow, especially on the capital gains front, so we can have a correction in the market or a further fall in the market. I'm not ruling it out. But the market being oversold, and if nothing negative happens, we can possibly have a 300, 400 points rise in the Nifty coming very soon. Either which way, if somebody believes that I'm ready to see a 10% downside from the present level, I think there is a 30 to 40% upside coming in PSU banks stocks over the next 12 months. So these are the spaces to be in. As far as capital goods and infrastructure goes, the numbers of Larsen and Toubro, which came yesterday, I honestly don't have any reservation with them. Even if the market is corrected, the stock is corrected a little bit. Let's understand the stock has gone up by 20-25% in the last few months. So a small correction over there, according to me, offers a buying opportunity. And why do I say that? I have seen AM Nayak on your channel for the last many years. And I think I have never seen him sounding more optimistic, more positive than what I saw him just a few days ago, or a few weeks ago. As far as Larsen & Toubro numbers goes, which came yesterday, I think the order flow growth was strong, driven by domestic demand. And the management has maintained that the order flow going ahead also should remain good. The company should benefit from execution and margin recovery. Now, the dent in the margin which happened, which has possibly disappointed the market, we have to understand has happened mainly due to the merger integration cost of L&T Infotech and Mindtree, and some little bit of higher staff costs. So a correction in this price, I would say L&T would be a good proxy bet for the entire capital goods space. There are many other stocks which I like in this space. They remain expensive. Even a CG Power is good, a Grindwell Norton is good, a Timken India is good. But these stocks have not given much way. They have not corrected much despite the overall correction in the market. So I would say there are interesting spaces to look at, interesting stocks to look at, and one will have to wait for the budget to come and go tomorrow before one puts in incremental money in this type of stocks.
Okay, but your bias is towards PSU banks and capital goods. Mehrbun, thank you very much for that. Do stay on. We need to slip into a very short break. As we do that, here is some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most influential, credible, powerful IBLA jury on the 8th of February right here on CNBC-TV18.
Welcome back. As flat can be, that's the shape of the market right now. The Nifty not moving at all, just about 3 points in the green. The mid-caps are having, of course, a much better session. And with that, let's also welcome in Prashant. He's with us in the studios now. Prashant, I guess not surprising, right? The market's had its share of volatility. It's had its roller coaster, especially last couple of days. Now perhaps just collecting everything and getting ready for tomorrow.
Oh, absolutely. And I think this Adani thing also getting done, right?
Yeah.
Although I think if you think about it, there will be a lot of questions in terms of there'll be a lot of thinking, let me put it that way, not questions, but thinking about what this really means now, right? I mean, what from now? This has gotten done in the shape and form that it has. But what now? I mean, is it back to as usual?
Or whether we'll keep getting those noise pops,
That's the more lingering kind of thing, which I think we'll have to wait and watch. But it's natural because look at the prices across those, the group stocks. They're pretty similar. The total issue is done about 0.9 times, and it kind of goes through now because that's the criteria. But it's not as if we've seen any large moves or anything. Stocks have come up, but they've been there for a while. The real action is in the broader markets, and we've been highlighting that. Yes, a range of stocks. Look at something like a Fluorochem, Gujarat Fluorochem, 7% higher from the low. It's had a one-way decline. Manyavar is up 7%. Kalyan Jewelers is up about 12% or so. I think we were highlighting BEL started at about 88 this morning, at about 95 now. Indus Tower, I think we highlighted. KPIT Tech, Apar Industries. Apar Industries is up 20%. So this is the part of the market in the broader markets which is jumping with lots of volumes. And these are single stock stories. These are not sector stories or tailwind one way or the other. Very, very individual sort of triggers.
Let me add one to your list. I don't know if you guys contributed or not. Around New Year's, Christmas, anybody had any burgers, any McDonald's? Look at Westlife's numbers. They're pretty phenomenal numbers. Actually, we've got not very bad mid-cap earnings as well. We discussed Godrej. GNA Axles was a good number. Yesterday, Masscom was a very good number. So finally, there's some green shoots, so to speak. Some green news coming in mid-caps as well.
Usually, you have good numbers in the beginning.
Of the season,
and then it deteriorates. It's been a bit of a reversal, but I mean that's a broad statement. Westlife, of course, numbers looking very solid, 75%. I don't know if you had expectation on this one. Revenues are up 28, 29%. And we'll have Mangalam join us with more in terms of details and the nuance there. EBITDA, operating profits are up 29% at 102 crores compared to about 80 crores. Through the quarter, over the last couple of months, whenever the management has been with us, they've sounded very confident. about store expansion, new product launches, range expansion, and of course demand, etc., doing pretty well as well. Now, Sun Pharma third quarter numbers also came through. They were in line with the expectations. Ekta is joining in with the fine print on this one. Ekta, over to you.
Thanks for that. Well, yes, Sun Pharma was largely an inline set of numbers. So the revenue growth was a total of around 14% The street was anticipating around a 13% growth. EBITDA came in at around 3,000 odd crores, which was in line with estimates, which resulted in margins which came in at around 26.7% versus around 26.4% same time last year, and in line with estimates. Similarly, profit growth was around 5% in terms of a total growth on a year-on-year basis. Now, a couple of key points this quarter. The street was anticipating a good growth from the specialty business, which basically comprises of key drugs such as Illumia, which is a psoriasis drug, Sequoia, which is an eye drug, Winlevi, which is an acne drug, and that has delivered this quarter as well. So it came in at around $222 million if adjusted for the milestone payment, which was in line with expectations, and versus around $200 million in the previous quarter. So a growth on a Q-on-Q basis. Totally, the US business, inclusive of Taro, came in higher on a Q-on-Q basis, $422 million, which was up 6.3% year-on-year, and versus around $412 million the previous quarter. India fell short a little bit in terms of expectations. The growth was 7.1% year-on-year. Street was anticipating anywhere between 8 to 10% this time round. So overall, it was largely an inline set of numbers. India fell short, but the specialty business continued to grow.
Thank you very much for that, Ekta. By the way, auto stocks are seeing buying ahead of the auto sales numbers tomorrow. The expectation is the CV, the premium vehicles will continue to do well, while two-wheelers might struggle. You can see buying, though, across the board. So Hero MotoCorp has moved to the high point of the day, more than a 2% gain on that. Tata Motors, whose EV portfolio has been shining, that's up 2.5%. And M&M, whereas we pointed out the XUV 400, the EV offering from the Mahindra Group, has seen very strong bookings in the first 4 days. M&M too is at the high point. So auto stocks are seeing some buying interest. Maruti too is in the green. But let's talk about the markets. It's flat on the indices, but the broader markets are doing well. The mid-cap index up 1.5%. Jay Bala of CashTheChaos.com joins in on the show now. Jay, afternoon. Do you think the 200-day moving average, 17,290, 17,300, is a firm support for our market? Because despite all the carnage that we've seen in the last couple of days, this 200-day moving average has held on. We haven't breached it. How much, do you think this is going to be a firm support for us? How would you view the next, the medium term?
Yeah, thanks for having me on the show, Rima. See, the market's in the habit of, transferring the money from the majority to the minority, and the much-tracked reference point of 200-day moving average is just a illusion for the moment. Markets have just got here, and it's, in my opinion, it's just a temporary support. And as I've been saying for several months now, the markets have got a great potential to drop below the June 2022 low, and that's about 15,183 intraday low, and probably 15,300 on a closing basis. So the markets are likely to head below that on a medium-term basis. From a short-term perspective, I think we are likely to see further intensification of the fall that we've seen in the last few days, and in all probability, the markets are unlikely to climb beyond 18,200. And if there is some sort of temporary bump up, that will probably get capped around 18,200, and we are likely to see much sharper and a deeper fall from here onwards.
Okay, all right. Hi, Jay. You have been maintaining that stance. What about the Nifty Bank, though? This week itself, yesterday itself, we went to around 39,500. From there, it bounced a little bit. How would you trade this index? Because that's the one that's taken the harder hit in the last 1 week or so. Trade and levels are located.
Yeah, see, the setup for index leaders within the sector, ICICI and SBI, they've got a very negative setup. And I won't be surprised if both these stocks halve from their peak. SBI made a high of about, I think, 570, and ICICI about 970. So, that's the potential. I'm not saying it will go there, but it's got that much potential in the medium term. So, so I would expect the banking index to take leadership on the downsides going forward. The short-term resistance is about 41,560 to 41,720. The short-term support comes in about 39,170. So, we're going to see minor bounces in the banking sector, but the medium term is very strongly down, in my opinion.
Okay. Jay, hi, good afternoon. So it's been quite a January for the market, right? We've had to digest so much of news flow and things going really all over the place. Let me ask you about the one part of the market which is a little excited, purely on news flow, on fundamentals, and that's the entire capital goods space, power, some of these defense stocks. They're all excited for obvious reasons, but purely speaking on technicals, looking at the charts, any one of these that kind of catch your fancy, that's on your radar, which has some strength behind it as well?
See, if you consider M&M as a defense stock, probably it's got some relative outperformance there, and it's also slowing down in its momentum. And if you, I would say it's got not too much upside, but at the moment that's one of the strongest stock there. But when it comes to relative outperformance, probably you can look at something like an IT, or I wouldn't put too much money as fresh longs from this point onwards. L&T, which was outperforming until a few days ago, even that stopped out, in my opinion. And the stock is probably going to go back to test the June lows. So L&T was an outperforming stock until a couple of weeks ago, but now even that's turned down. And so I don't think there are any fresh pockets within the strong pockets within the capital goods or the defense sector.
Jay, you're throwing bombs, yeah. I mean, this will half and that will go down to June lows. I mean, as they say, thoda to khayal kariye. What can that's a view and that's perfectly fine. But the global markets, etc., looking a little better. It's not exactly all down and out. I mean, look at what's happening. I mean, actually, the U.S. tech sector was trading almost as if it's go-go time once again, right? Look at what's happening with Tesla, Bitcoin. It's a bit of a risk on. Now we'll find out if this is for real or it gets reversed with inflation prints, labor data, Fed, etc. But if that were to be, I mean, if this were a move which continues, you'd still hold the view that irrespective of what happens elsewhere here, things are going to look pretty dire in the medium term?
Yeah, that's a very important question, Prashant. Yeah, I think the trends are pretty independent of what's happening within the global markets. But I think, we have seen that in the last several weeks, when the world markets were staying up, Indian markets have started caving in. They came from 18,800 to 17,400. So that's a 1,400 points drop. And all that talk about decoupling and all that, that's been blown to bits. And, it's going to continue to do that. And when it comes to the US equities, I think it's a matter of time before that also takes a turn down for the worse. And that will give added pressure to the Indian markets. Until now, that wasn't putting pressure on the Indian markets. So watch out for the S&P futures 3963 and 3901. Once that get taken out, it's pretty convincing that the short-term bump up that we saw from December, that's also done. And we will get additional pressure from the global markets.
Additional pressure from the global markets. That has a finality associated to it, but that's okay. That's perfectly okay, as Prashant said, Jay. Appreciate that view, and we will, of course, remember it. Thank you very much for joining in and giving us your perspective on the markets today. That's Jay Bala of Cash the Chaos, the markets. I think they were listening to him because we've got some red back on the screen, Prashant. It's just absolutely flat on the Nifty. The Sensex is mildly lower, about 140 odd points lower. Okay, before we move on, it is that time on the show where we announce the winner of our budget contest. You came, you saw, and you answered. Thank you, our viewers, for participating in the CNBC-TV18 budget quiz. The question for today was, what was the fiscal deficit to GDP for FY22 revised to in the last budget? And the correct answer is D, 6.9%. Now, today's winner is Manish. So congratulations to you. And remember, all our viewers, you can keep watching CNBC TV18 and you can keep winning daily prizes on the CNBC TV18 budget quiz. Quick break right now. What are the dealing rooms saying as we get set for budget day? We'll have, of course, D-Street chatter with Nimish coming up, along with trading calls for the last half hour.
Welcome back to Closing Bell. You're coming live from the CNBC-TV18 Motilal Oswal studio. Well, the couple of stocks are deserving mention actually as we speak. ITC clearly going into the event, not expecting a shocker, so that's at the high point of the day. And Bidla soft from the broader markets, well, that's another one that's bucking the trend. It's currently moved to the high point of the day. But it's a good time to go across to Nimesh on our special segment, D-Street Chatter. Nimesh, what's the insights into dealing room?
Well, Nigel, the good part about today's market is there is a bit of a broader market participation. So the broader markets have done well today. And there are two bits to it. One, my understanding is there is lack of FI intensity selling. We've seen the kind of numbers for the last couple of days, 5,000 crores and 6,000 crores of FI selling on a daily basis. That seems to be not the case today. So that's one good bit. I think the second part where there's a bit of comfort in the market today is the fact that now it looks like the Adani Enterprise FPO will go through. Reason being, one-time QIB subscribed, so that is taken care of. Overall, it's more than 90% it's been done now. So those two factors means that technically, even if from here on there is no single bid, the issue goes through. So that's the reason why there's a bit of comfort in the market, and that's playing out in the broader markets. Even in terms of, if you look at sectors, financial is something which has seen a bit of a bounce back today. But again, while yes, there is a small buying interest in that pocket, but the bigger thing is there is lack of selling from the larger FIs. That's been the big trend for the last many days in the financial names, and that's missing today. Technically, I guess now 17,800 is the level to watch. That's been a big support in the past. Now it's become a resistance, so that's something to watch out. I guess budget will be very important to watch out tomorrow. If there is no specific mention about capital gain tax, maybe you'll see a further relief rally. So that's the overall feedback from the markets. I guess today, there is no big larger participation also because there is a big event coming up tomorrow. So that needs to be out of the way. One big event, which is Adani FPO, that's out of the way. Now, if budget is out of the way and there is no negative surprise, you might see a bit of a pullback rally, given the fact that we've fallen so much and the bank nifty has fallen massively in the last few days.
Well, that's right. Nimesh, it'll be a relief to see if the FIs slow down on their selling, because it's sold about $800 million in a single session. That is the highest since June 2022 itself. Yeah. What about individual stocks, though? What are you picking up?
Before I talk about individual stocks, Nigel, even in terms of the FI selling, while everybody would have thought that because of this whole Adani thing, there is panic from the larger FIs, the feedback that I am getting personally from most of the dealing room is that there is genuine money moving out from India to other markets which are doing relatively better. You keep hearing every global expert talking about China being a preferred market. So there is this tendency of money moving from India to other markets. So that's playing out as far as the FI flows are concerned. Now, coming to the individual stocks, now the first stock on my list today is Zomato. After a very long time, the feedback is there is a massive buying interest at a leading FI desk today, and hence you have seen a bit of an up move in that stock as well. So the delivery volumes are expected to be quite high in Zomato in today's state. So that's the first one. The second stock is ICICI Bank. While overall there is a feedback that some bit of buying interest is back in the financial names, ICICI Bank is the only stock where the feedback was there is still selling supply from a larger FI. So looks like at least this is one stock where there is a shift happening from ICICI to other private banks, and hence that stock is still under pressure as far as flows are concerned. And the last one is Aurobindo Pharma. Again, almost at 52-week high, even at these levels, the feedback is there is selling pressure from the larger FI. So delivery volumes for the last few days has been high. That's going to be the case today as well. But looks like a leading FI is taking a big call and exiting Aurobindo Pharma, and hence that stock has been under pressure throughout the week and in today's trade as well.
Okay. By the way, Nimesh, thanks very much for that. News coming in at the bottom of the screen. The Adani Enterprises FPO is now fully subscribed. This is exchange data. This is on the BSE and the NSE. And, the total issue is now been done fully. 100% the issue, the shares on offer have been taken up. So 1.02 times to be precise. And this is data as of 309. So that's the latest. The QIB portion is also now approaching the one-time mark, 0.97 or so. And the HNI portion is done, according to the BSE, some 3.2 times So very, very strong participation on the HNI front. Retail, of course, is still languishing a little behind, 0.1 time. But the total is now fully done, fully subscribed, the Adani issue, the Adani FPO. That's what's coming through in terms of the big story. Now, Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. This is a tricky one, Mitesh, because you've got budget at 11 o'clock, the budget speech at 11 or so. But of course, the market will be trading for 2 hours before that. So what kind of trades would you want to take?
So, Prashant, I think, a couple of names which are still showing good strength and technically, I think, could do better unless something very negative comes in. As one of them is IRCTC. It's bounced back sweetly from the lows of below 600 or just around 600 levels. And now I think a BTSC trade can be done. Keep a stop at about levels of 628. Look for a 647, 648 kind of a target for tomorrow. And ITC, I think Nigel was just highlighting that, making a fresh high. It's been a buy earlier as well. The overall pattern suggests that the correction is over. Good chance that this will see continuation. So keep a stop below 349 and a target of 358 for tomorrow.
Okay, Mitesh, thank you very much for that. The auto sector is seeing a lot of buying. The Nifty Auto Index is up 1.9%. This is ahead of the January auto monthly sales numbers, which will come out from tomorrow, start trickling in. Sonia is here with a roundup of the key expectations. Sonia.
Well, thanks a lot for that. As you rightly pointed out, it's expected to be a very good showing from the auto sector for a large number of pockets, be it passenger vehicles or even medium and heavy commercial vehicles. The only problem area will continue to be two-wheelers because of the fall in exports as well as a slowdown in the domestic market. Now, if you look at the key numbers, the passenger vehicle industry is expected to grow by 21% year-on-year. The medium and heavy commercial vehicle industry is expected to grow by 26%, while the two-wheeler makers, the volumes will be down about 30% from the peak that we've seen in January of 2018. Let's go by what individual companies could do, and these are Nomura's expectations. The good numbers will come in from the likes of Maruti, M&M, because of a slew of new launches over here and the focus on SUVs as well as premiumization in the passenger vehicle space. So for Maruti, total volume growth of 13% is what we're looking at. M&M, the auto volumes are expected to go up by 35%, while Tata Motors, the volumes could go up by about 10-odd%. TVS Motor could also be the outstanding performance in the two-wheeler space because the growth is expected to come in at about 10-odd%. And in the medium and heavy commercial vehicle space, it's Ashok Leyland that could outperform with a gain of around 26-odd% on the volume front. The disappointment has really come in from two-wheelers, so both Hero and Bajaj Auto could be under pressure. Bajaj Auto's numbers are expected to fall by 17%, while Hero Motors' growth could be in low single digits. Back to you.
Okay, got that for the auto sales expectations, Sonia. But before we let you go, I do want to talk to you about EVs, right? That's where the rush is, the gold rush, so to speak. And I know you've been looking at a lot of data with the Mahindra and Mahindra's latest offering, the XUV 400 EV, the EV version, right? So what's the feedback?
Well, it was a no-brainer. I did get a chance to test drive the XUV 400 EV, and at that point I knew this was going to be a great product. In fact, on 26 January they started bookings, and the company has already seen 10,000 bookings since Jan 26. The deliveries will of course begin from March of this year. Nomura put out a note where they say that there is very high interest in electric vehicles despite the uncertainties with respect to the charging infrastructure constraints, and they expect a demand potential of 3,000 to 5,000 units per month for the XUV 400. They maintain a buy with a target price of 1,600, and the current valuations at 8.4 times FY25 EV to EBITDA is still quite attractive. Now, the other big thing I'm watching out for is what comes out in the budget tomorrow. Now, the taxation structure in India has been very positive for EVs, especially for SUVs. Currently, if you are buying an EV or if you are renting an EV, the GST has been brought down from 12% to 5%. Not just that, if you are charging your EV at a charging station, they've already brought down the GST over there from 18% to 5%. Now the ask is for other EV-related products, whether it's battery swapping, last mile delivery, the GST should be brought down further. Also for hybrid vehicles, there's an expectation that GST will be brought down. Now, if that comes through, then it will be a big positive for names like M&M, for Tata Motors, Minda Industries, and hence these stocks are moving up in anticipation of that. Back to you.
All right, Sonia, thanks very much for that. So that's Autos in Focus. Harendra Kumar is Managing Director at Elara Securities. He's joining us now to take some questions. Harendra, good to have you with us here. Respond to the news which is just coming through, Harendra. the FPO getting fully done one time. This is, of course, exchange data. Any thoughts? I mean, this has, of course, been the big #1 issue, point of discussion in terms of impact on the group and, of course, the market as well. With this getting done, what now? What from here, in your opinion, Harindra?
Yeah, I think, the aspect is, while it's captured a lot of news attention in terms of the price impact has been very narrow to some of the PSU banks, to put it in right perspective. So I think, thankfully, now we go back to real numbers, real markets and real, events, which is the budget tomorrow. I think while it's become a fashion to say that the budget is not material and it doesn't change the course of the markets, I think tomorrow's budget, if crafted well, will have opportunities to change course of the market. And mind you that we've been now for the last 6 quarters at the same level, index levels. And, this is quite excruciating to be at a certain level. Thankfully, we've seen a lot of value emerging in the market. And if the right moves are made, we could see the market taking a lift off, which is, due for quite some time now.
So you don't think what we've seen over the last couple of days with the Adani Group has kind of broken the rhythm of the back of the markets right now? You don't get that feeling? You think we can go back to what it was, say, a week ago?
Yeah, actually, we've been at the same level for the last 6 quarters, which is around 18 months. And we've seen a temporary blip. But the price damage on at least an index level has not been much. But to put it in the other way, right, what are the events that could probably play up in the current financial year is, one is on the 10 years sharp correction, inclusion in the bond index, a return of the FI flows, which is over the last 2 years have been absent, increase in the FDI number. So if these issues get resolved in the budget tomorrow, I think you could see a large swing or, pullback into the markets. And I think at least we would be watching for, clues on that front, and get a perspective on where should you be tactically positioned in the market for the next 24 months.
I'd request you to hang on for just a minute. By the way, just to pull up a couple of stocks in the broader markets. Suzlon has suddenly found its mojo. It's moved to the high point of the day. Shahi India as well has spiked up in the last few minutes. So just keep an eye out on that stock as well. But from the Nifty pack, UPL has come out with its set of numbers. Well, Sonal has had a brief look at that, and she's also here to run us through those numbers, as well as, Sonal, they're reiterating their guidance on the revenues as well as on the debt reduction, right?
Oh, yes, they are. And that's a positive because the company did speak about channel inventory destocking as well. And they say despite that, they expect that revenue growth that they had guided for earlier, they had guided for a revenue growth of around 12 to 15%, EBITDA guidance of around 15 to 18%, and also their debt reduction guidance. Earlier, they had guided for $650 million in terms of net debt reduction, and they continue to hold on to their guidance as well. This time around, revenues are up 21% at 13,679 crore rupees, which is slightly better than what the street was working with. Even in terms of EBITDA as well, the company has done better. But if we talk about the margins at 21.1%, this compares with a poll of 21.9%. Profits too for company this time around have looked good. Now, if we talk about the geographical breakup as well, this time around the company has done well across all the geographies barring Europe, and that continues to be a pain point for the company, and they did say that that is something that will continue as well. So Latin America has grown by 28%. That continues to be the big growth market for the company. North America has grown by 30%. India also as a market is up 19%, and rest of the world is up 12%. While India this time around, because of the erratic weather, was expected to be on the lower side, but that hasn't happened. And across the board, barring Europe, the company has done well, and also maintaining that guidance in a challenging environment. And also at the time when other agrochemical companies have not reported good numbers, this comes as a surprise. And also reasonable valuations are lowest in the agrochemical space, around 12 times 1-year forward earnings. All this bodes well for the company, and that's why the stock is higher in trade as well.
Thanks a lot for that, Sonal. Harinder, what do you make of the stock? Valuation-wise, it's had some bit of comfort. Street is always skeptical in terms of, the promoter pedigree at times and other various factors. What do you make of the numbers and your view on the stock?
Sorry, which company?
UPL. UPL.
Yeah. So, okay, so, Nigel, I think the way to look at the agrochemical companies is that we are in a super cycle in terms of food inflation worldwide. And within that space, I think, a lot of the agrochemical companies will see tailwinds in terms of prices and higher volume growth. While the Indian companies have a restricted market, UPL has access to the global markets. I think beyond, certain circumspection, I think UPL stands to benefit from this secular trend. I think food inflation in terms of, worldwide food inflation is here to stay, even in the current financial year, and UPL could be a primary beneficiary out there.
Okay, all right, Harendra, great having you on the show. Thank you very much for joining in. We'll leave it on that note for now. The market's looking quite interesting, actually. Some of the stocks are flying around now. Look at ITC, look at Lever. So a lot of the pre-budget hope play perhaps is quite evident as we get set for today's close. The intradays will come up for you. Days high on ITC, Lever's looking good. Let's do one thing. We'll take a break and start recapping what is the final trading couple of minutes before the budget.
Okay, well, just last 3 minutes or so as far as today's market session goes, and we're going to end higher, 27 points, 28 points on the Nifty, which is not bad with the absolute sideways, disinterested kind of trading action we've had, at least on the index. It's really not been about the index, but 17,673, so a little higher as compared to yesterday's close. Mahindra & Mahindra, top gainer on the Nifty, SBI with a 3% pop. I think it does end almost at the day's high. State Bank of India, Ultratech with a 2.8% gain. Ultratech did well yesterday as well. BPCL up 2.6, Power Grid, Eicher Motors, and of course Adani Ports, which ends about 2.5% higher in trade. Tech was lower from the word go, Tech Mahindra, TCS, etc. And there was, Bajaj Finance, which was down about 2.5 as well. Rima.
In terms of the sectoral movers, the Nifty PSU Banking Index was up 4.6%. So that's where that big outperformance came through. The Nifty Bank itself was up 1%. Apart from that, strength in the Nifty Auto Index ahead of the sales numbers. The Nifty Auto Index ending with a gain of 1.8%, and the Metal Index was up 1.5%. On the losing side, IT and Pharma struggled in trade. The Nifty IT Index down 1.3%, and the Pharma Index down close to about 1%. Just a couple of big movers on the mid-cap end of trade outside of the index. In the Adani Group stocks, Adani Total Gas down 10%, Adani Power lower by 5%. Laurus Laboratories also weak in trade, came out with numbers yesterday, the stock ending down 5%. Automotive Axles up 9%, NIIT Limited, all these were reacting to their numbers. NIIT Limited up close to about 7.5%, and you had some action in names like BEL, NFL, RCF, Mazgaon Dock. As you said, it felt like a pre-budget day.
Yeah, so quite a few of those names, Bharat Dynamics, etc. So a lot of these companies, a lot of these stocks on the green side of the screen. By the way, in result reactions, GNA Axle stands out. There's a really good number. Let's pull up Westside as well, because again, Westside numbers came in just about 20 minutes back and they were very good. Stock was up 4.5% last I saw. That's GNA Axles for you. We'll just get Westlife as well. Yeah, so these are some of the stars, the earnings stars of the day. And Mazgaon, of course, continued its run from yesterday. Up and about. Split house as far as the Adani Group grows. As we're closing down, Adani Green and Transmission are in positive. Total Gas, Adani Power, some of the other names are definitely on the red side of the screen. But I guess the heartening aspect of today's action is that, we had some flare come back in the mid-cap market. There was finally some life returning to the banks. And I guess we go in tomorrow's session with a fair amount of hope and fingers crossed.
And the Adani FPO closed today, right? This was a big trigger for the market, a big event that everyone was watching, and they managed to sail through.
And I think maybe if the budget doesn't throw any surprises, maybe we see some more, charged up action when we come back tomorrow. But of course, I mean, there is also the Fed meeting, right, which is only later tomorrow in the evening. So that's going to be another googly. And the Fed will be coming in at a time when the US markets have rallied quite a bit. Not the best kind of position to be in, but that's only later tomorrow evening, which of course markets will react to on Thursday morning. But lots lined up over the next 24, 48 hours or so. It's a wrap on this edition of Closing Bell from all of us here. Thank you very much for watching, but don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.
Co-presented by